Most people lose money trading crypto, not because they're unlucky, but because they enter at the wrong time. In this video, I'll show you how to start trading crypto the right way, with a system used by professional traders, not gamblers. You'll discover how smart money reads supply and demand zones, times sniper entries, and builds profits while everyone else chases pumps. If you've ever wanted to trade like the pros, calmly, confidently, and profitably, stay right here, because by the end of this video, you'll know exactly how to enter any crypto market with precision and control. You know what separates winning traders from the ones who quit? It's not luck, it's not even timing. It's where they choose to enter the market. Your entry price, that one decision, can determine everything. I've seen it over and over again. Two people buy the same coin same day, but one walks away with profit while the other panics and sells in fear. Why? Because the first one understood structure. A great entry isn't just about numbers. It's about control, discipline, and peace of mind. So before you click buy again, pause and ask yourself, am I entering with a plan or just chasing emotion? The answer to that question might define your future as a trader. Let me share a secret most retail traders never realize. The real money doesn't chase price, it waits for it. Unmitigated zones, those untouched supply or demand areas, are where institutions quietly place their orders. Think of them as hidden gold mines on the chart. When price comes back to those zones, that's when the big players step in again, defending their territory and driving the next major move. If you learn to spot these zones, you're no longer guessing. You're trading side by side with the smart money. So instead of reacting to every candle, you're waiting calmly for the market to come to you. That's how precision replaces emotion, and patience turns into profit. Have you ever seen price suddenly shoot above a high, and everyone rushes in screaming, "Breakout," only to watch it crash seconds later? That's what we call a liquidity sweep. It looks exciting, but it's a trap set by bigger players to grab stop losses and fuel their own positions. The truth is, real breakouts don't happen with emotion. They happen with structure and confirmation. Smart traders know this. They wait for the candle to close above the level, not just touch it, because patience protects profit. So next time you see that dramatic spike, take a breath and remember, not every breakout is real, and not every green candle is your invitation to buy. Here's something most traders overlook. Institutions don't buy or sell everything at once. Their orders are so massive that they have to scale in slowly, spreading entries across several zones. Every move they make leaves subtle footprints on the chart. A shift in volume, a sudden rejection wick, a hidden imbalance. When you learn to read those clues, you stop trading like the crowd and start following the flow of real capital. Remember, the market moves when big money moves, not when retail traders panic. So instead of chasing FOMO candles, train your eye to spot where institutions are quietly positioning themselves. That's where true opportunity lives, in the calm before the storm, not in the noise of the breakout. Think of supply and demand zones as your personal GPS inside the wild world of crypto. When prices feel chaotic and unpredictable, these zones show you exactly where smart money is stepping in, and where it's quietly exiting. They're not just lines on a chart, they're clues to market psychology, to how institutions think and act. Once you understand them, you stop reacting emotionally and start navigating with precision. Instead of guessing where the market might go, you'll know where the strongest reactions are likely to happen. In a market that thrives on volatility, clarity is your biggest edge, and supply and demand give you the roadmap to trade with confidence, not confusion. One of the biggest mistakes new traders make is staring at just one chart. The pros don't do that. They think in layers, using higher timeframes like the 4-hour or 1-hour to find powerful supply and demand zones, then zooming into the 15-minute or 5-minute chart for laser-precise entries. It's like seeing both the forest and the trees. You catch the big trend and the perfect moment to strike. This top-down method not only sharpens your accuracy but also builds confidence, because every trade aligns with the bigger picture. When your entry, structure, and trend all speak the same language, trading stops feeling random and starts feeling like strategy. In today's world, smart traders don't just trade, they automate. Tools like TradingView alerts, multi-timeframe indicators, and AI-powered journaling systems can do the heavy lifting for you. Imagine getting notified the moment price hits your perfect demand zone, or having AI automatically track your emotions and trade patterns in real time. That's not science fiction, It's how modern traders stay consistent without burning out. Automation doesn't replace your strategy, it enhances it. It gives you more time to think, plan, and live, while your systems quietly work in the background. In the end, the goal isn't to stare at charts all day, it's to build a setup that earns even while you sleep. Every trader remembers that sinking feeling, when price slices right through a zone you thought would hold. But here's the truth. A failed zone isn't a loss, it's a signal. When price breaks through a supply or demand area, it's the market's way of whispering, something's changed. It means power has shifted. Buyers no longer control the move, or sellers have finally taken over. Smart traders don't fight it, they adapt. They see failed zones not as mistakes, but as turning points. Because when a level breaks, a new trend is often being born. The key is to stay flexible, read the shift, adjust your bias, and ride the next wave before everyone else realizes what just happened. One of the hardest lessons in trading is learning to trust what's on the chart, not what's in your head. The crypto market moves fast, and emotions can trick you into chasing green candles or panicking at red ones. But real success comes from logic, from following structure, managing risk, and waiting for confirmation instead of reacting on impulse. I've seen midlife investors turn chaos into calm once they learned to trade like this. They stopped trying to outguess the market and started following the data. Remember, crypto doesn't reward excitement, it rewards discipline. When you trade what you see, not what you feel, your strategy becomes your anchor in a sea of volatility. Fair value gaps are like magnets hidden inside the chart. Tiny pockets where price moved too fast, leaving imbalance behind. After a market structure shift, these gaps become powerful clues. Institutions often use them to reload positions before continuing the main trend. So, when you see a fair value gap or an order block form, don't rush. Wait for price to return there. That's usually where the next big move begins. It's like the market taking a deep breath before the next sprint. Smart traders use these moments to plan precise entries with tight risk and huge reward potential. Remember, patience here isn't wasted time. It's the waiting room for opportunity. Let's bring this to life with a real example. Bitcoin's recent reversal. On the 4-hour chart, BTC formed a clean demand zone after breaking structure to the upside. Then price pulled back, tapped that zone, and reversed exactly where institutional buyers were waiting. When we zoomed into the 15-minute chart, a clear market structure shift confirmed the entry. That's the beauty of combining higher timeframe zones with lower timeframe precision. It turns theory into consistent results. Every candle told a story of smart money reloading, not randomness. Traders who recognized that 4H demand and waited for 15M confirmation caught the move early, proving once again that patience and structure always beat emotion and luck. At the end of the day, trading isn't just about charts or numbers. It's about mastering yourself. Every candle tells a story, but only the disciplined can truly read it. If this video helped you see the market with a little more clarity, imagine what you could learn next. We're just getting started. There's so much more to uncover about smart money, mindset, and building income that works for you. So don't just click away. Hit the like button, subscribe, and turn on the bell so you never miss a chance to grow with us. Your journey to becoming a confident, profitable trader starts here. And I'll be right here to guide you, one video at a time.